Alright guys, in today's video we're going to be going over leverage and how we can't over leverage our account. Yeah, because too many of us are blowing our accounts by over leveraging. I know we're chasing money and we're trying to make the money, but we need to trade at a reasonable volume. Otherwise, the quicker we fund our accounts, the quicker we're going to blow them by over leveraging them. Once we don't over leverage our accounts, we'll be able to sustain the market. If it goes up, if it goes down, it doesn't matter. Our account will have enough strength in the market to weather any storm. But don't worry, let's head over to the charts and we'll go through it. Leverage. Alright, let's get to it. Now that's one thing in the market that we need to be aware of, is our leverage. Because once we over leverage, then it's game over for our account. Forget about our account. Our account is gone, because we're gonna blow our account if we over leverage our money, and that's what we can't really do. Yeah, we have to make sure we're working at the right money management. So now, for instance, this is the daily Euro USD. Now, the best thing to do, or my suggestion is, because everyone talks about, alright, so what's the right volume to trade at? Now, if for instance you have, say, £1,000 in the account, and you obviously want to grow that account, so on a cautious, I would say trade at probably 50p a pip. So that will be, if you go to this control panel here, that will be 0.05. That's 50p per pip. Now you can still make pretty good money from that. Now, me saying that, because for instance, if you had 0.05 and you're trading at that 50p a pip, and your account balance is 1,000, if for instance, I don't know, you wanted to trade, say, this little section here, and you thought, okay, this section here, I want to trade it down, and I said, you know what, I want to trade it down, so I do. So say you get in somewhere around here, wherever, you trade it down, it goes down to here, but you thought, you know what, it's going to keep going. So now, as you realize, the trade doesn't keep going south. Yeah, because we're selling it, so it doesn't keep going south. What does it do? It goes all the way back up. Now, we're talking 468 pips or so before it makes its return back south. So now, we want to be able to have an account that can withstand. Obviously, 468 pips is quite a lot, but we want to be able to trade at an amount that can withstand if the market went against us. What I mean by market going against us, if we say we're going to trade, if we're going to sell the Euro USD, but it goes up, which is really a buy signal, but it goes up, then you want to be able, your account needs to have enough strength to be able to hold that account, or keep your account alive, I should say. So, whereas, for instance, if you had £1,000 account now, on the flip side, you had £1,000 account, and then what you said, okay, I want to flip this £1,000 account to 10,000 this week, so I'm going to trade at 2 standards. So 2 standards is 2.00. That's 2 standards. Yeah. 1 standard represents £10. So 2 standards will represent £20 per pip. So now, even if that went up, you had £1,000 account, and the market, say you was trying to sell it at this point, you went to feel it will continue to go down, but it went against you. Even if it went against you 250 pips, that's times 20. So more than likely your account would have been blown. Yeah. So we want to trade at a reasonable volume. once we can trade at a reasonable volume, you would hold your strength in the market. Meaning, if the market went against you or against the direction you're trading, you'll still have enough money in your account to keep it alive. Whereas you don't want it to go in the red, where you can trade at a high volume and the account will go in the red, and once it goes into the red, it will just, if depending on the spread, the pip spread, it could blow your account. So, and as well, when opening a trading account, they got different leverage, which is 1 to 200, 1 to 300, 1 to 400, 1 to 500, 1 to 1,000. So you want to kind of, me personally, I would want to get the most out of it. So by me getting a higher leverage, so that's 1 times 1,000 my money, that would leverage my money, then I would go for the highest leverage I can get, which is a little bit more risky, but again, it would be the highest leverage I could get. Whereas if you get 1 to 200, they're only leveraging your money, timesing your money by 200. Whereas you want to get the most out of the market. That's why, as well, you don't over leverage your account by trading at a high volume. Don't get me wrong, there's traders out there that trade at a high volume to get high gains, but that is high risk trading. You want to be able to trade the longevity of it, yeah, not just a high risk. So for instance, we can see now this Euro USD. In fact, this is also, yeah, so this is Euro USD. Now as we can see, the market's come from here, which is a good resistance level. This little resistance level here and this little resistance here, it tapped it, went down, it broke through, but it couldn't sustain to the upside, so it broke back through. It's ranging in this way. Now it's come back to this point, and what did it do? It's gone back down. Now once it gets to this level, let's change the color. Once it gets to this support level, I believe the market is going to do something. So that's another, I would say, put this on your radar or on your to-do list to analyze. But once the Euro USD gets to this support level, it's going to do something. Take note, it will do something. So for instance, if you had traded this south, you'd have been in the money, because we're talking, this is at the moment, say 400 pips, so you'd be in the money. You'd have been in the money, because you could see the prehistoric, what it's already done. It's got to this level, it's come back down. It's got to this level, it's come back down. It got to this level, it went back up. But once it got to here again, from previous price action, you could see that if it broke, it would have excelled. It would have really excelled, but it didn't. It tested it, it didn't break through the resistance, and it dropped back down. So the only other obvious level for it to really reach and to do something, I would say, is this support right here. Don't get me wrong, there's also a little support level here, but as you can see from the upside, it thrusted through here, consolidated a little bit, it broke back down, but it didn't go anywhere. It didn't go anywhere. It came straight back up through the support level, consolidated a little bit, broke back through again, didn't go nowhere, didn't do anything, and it thrusted back up again into this channel. So this is a good channel to see where the market may be going next. As again, it didn't sustain going on the upside, so it only broke through, but it went back into the channel. As you can see, this candle, big doji, went all the way up. I want to say it didn't really touch it, but it's not far off of touching the resistance. It came straight back down, and look, it's on the downside. Now from this level here where it didn't, well, it did break previous support, but it gave us a good signal to go back up. Come to resistance, good signal to go back down. So we also know once it gets to this level here, this support level here, it's going to do one or two things. It's going to exhale down, or it's going to go back up. That's the only two things it does. That's the only two things the market ever does. It goes up or it goes down. You can either buy the market or you can sell the market. So yeah, that's one for next week, I would say. Put this on your radar to look at the Euro USD, because once it hits this level, it will definitely do something. So yeah, but the main thing, guys, is the leverage. Yeah, do not over leverage your account. Trade at a sensible volume where you can withstand the turbulence of the market to if it goes against you, so you won't be out of the money too long. Even if you're out of the money, you still have strength in your account to withstand, say, the storm of the market. But yeah, guys, thanks for watching this video. Please subscribe if you haven't subscribed yet, and drop a comment if you want any more videos. Peace.